I say I'd be inclined to agree. Wave 13, bar 13 of wave 4 is much too late to enter a wave 4 trade, but Sentient Trader did it in this example, and as you can see, we closed the trade with only a 1% profit. Now, so I hope that explains why. As Luca's original question is why do none of them start at 0? Because the counting only starts from bar 1 of a particular cycle move, okay, and so that's why there aren't any zeros, and that's also why the trade paths start on different bars. Now, how can you use this information, and where are we going with this? Because let me select all. Okay, there we go. Okay, okay, where are we going with this? Why are we doing this? Why? What can you do with it? Okay, well, when you're trading the market on the basis of cycles, something very interesting happens. Of course, and that is that your equity, your profit or loss, your trade path, contains all the cycles shorter than the cycle that you're trading. Okay, if you think about it for a moment, if you are in a trade for, if you're in a 40-day cycle trade, let's say we're in a wave 1 40-day cycle trade. A wave 1 40-day cycle trade will probably last on average for 10 to 15 days. Okay, it'll be a 10 to 15 day trade. Well, in fact, here we can have a look. I'm probably wrong. Closer to 20 days for a wave 1 trade. Okay. Now, for those 20 days, you have got into the market. So all the shorter cycles are going to be reflected, of course, in your equity, because all the shorter cycles are still ticking over. They're moving up and down and up and down. So the 2-day cycle is moving up and down. The 5-day cycle is moving up and down. 10-day cycle, and so on and so forth. Okay, so your equity will have some cyclical moves to it, and you can have a look at it. The result was, we realized quite a long time ago that most of your trades have a cyclical shape to them themselves. Okay, and let me show you. I will show you that cyclical shape, and you're going to see it on all of these things. Okay, obviously you start at break even. Okay, the cyclical shape generally goes up and then comes down. Okay, that tends to be the shape for your winning trades. Okay, if we have a look at any one of these tabs, you're going to see in a very general, let me show all, you're going to see in a very general sort of a way the same shape. Okay, so you start at break even, of course. Generally, each wave has that sort of a shape. I don't know if you can see it. I'm hoping you're seeing it. You should see it as you start doing your trades. All your winning trades have that kind of a shape. Okay. What about the losing trades? Well, let's have a look at the losers. The losers, as you can see, have a very different shape. The losers have a shape which goes break even and fiddle around and then exit. Okay, that's the shape. It's not a very well drawn shape, but that tends to be the shape of losing trades. Okay, here you can see it again. There's one very unusual trade, which is this trade here, which is rather spoiling our trade paths at the moment. But as you can see from these losing trades tend to wobble up and down around your break-even level. Okay, that tends to be the shape of a losing trade. Let's have a look at the losing trades here. I think you can see it. I don't need to draw on it or squiggle all over it. The shapes of losing trades tend to, most of them, have a squiggly shape around about your break-even level. Here's an interesting one. Oh, by the way, you can zoom in on these charts by doing the same thing you do with the Sentient Trader chart. Okay. You can drag your charts using the same type of thing so that you can see better detail. You can see out of all these losing trades, most of them, of course, wobbled around the break-even level and then ended below the break-even level. You can see there was one trade here which followed the shape of a winning trade, very importantly, and then turned into a losing trade. So now this is why we did all of this, because, as you know, I'm obsessed about the shapes of cycles, and I see shapes of cycles everywhere, and I started seeing the shapes of cycles in the trade paths of the trades that we were taking. Okay, so now here's a really good example. This trade here is a trade that was, I see your question, Jose and Luca, I'm going to get back to it, I'm just on a bit of a roll here. Here's a trade that has a shape of a winning trade, and then it turned into a losing trade. Now, the whole idea of using this trade path information is to avoid winning trades turning into losing trades. How do you know the difference? Because you start watching the trade path of your trade. If the trade path of your trade looks like the trade path of a losing trade, then you get out. Okay? If the trade path of your trade is the trade path of a winning trade, then you make sure that it doesn't turn into the trade path of a losing trade, and we'll speak in a moment about how to do that. Okay, so I hope this is all making sense. Let me answer some questions, and no doubt that will help to help it make more sense. Luca, why are there green dots between, for example, 13 and 14? Luca, it's just the way that the charts are plotted. You can see here on the scale that I've got here. This 22 lines up with this bar. So then bar 22 is the area after that. Then bar 23 will be the area after that. Bar 24 the area after that. Bar 25 after that. So this dot here was in bar 25. In fact, what we must do is in the plotting of the scale is shift those numbers over half a bar. Make sure we do that for the next release. So we'll shift those bars over. I think that's what you're looking at. Jose, because trading short techniques are different and less accurate to long trades. Short trades will probably enter in later bars than long, am I right? Yes, so studying this gap will give us a clue of how many bars it is needed to confirm a short leg is in place. Yes, Jose, exactly. You can use information like that to determine at what point your short trades are likely to be more profitable. I don't know whether that's going to show through here, because these trade paths I'm showing you here are as a result of an automatic hypothetical trading history that has been built using the software. Of course, wave 1 trades are all long trades, and you will notice that long trades have a different shape to short trades. Here are the short trades on wave 2 and wave 4. Wave 2 and wave 4 are short trades. Wave 3 and wave 1 are long trades. You'll notice that the wave 3 the wave 3 trades tend to have a different shape and are often more difficult to perform correctly, in other words, get out at the right place than a wave 1 trade. Okay. So yes, Jose, in theory, you're absolutely right, because the technicalities of entering a short trade are different to the technicalities of entering a long trade, because you're looking for different confirmations. You're looking for confirmation of a peak as opposed to confirmation of a trough, and it's more complicated entering a short trade. You're absolutely right. You should see trade paths of those trades being different. So you are correct. I'm really excited about this whole trade path feature, and we've made it available to you now, and encourage you to do your own research. I'm going to explain to you in a moment some of the ways in which you can use it straight away, hopefully to immediately impact and improve your trading. Lots of questions. Let me see if I can keep up. Let me finish with Jose. At the end of the day, it's the character of a particular market, exactly. A graphic result of wave shapes analysis. Okay, Mr. Question from William. is it possible to average the favorable excursions and the adverse excursions? No, it's not. It's not possible. It's not possible at the moment, but that would certainly be a good idea. And in fact, we'll add it to the list. I think a few good ideas are going to come out of today's trader chat. So we'll add it to the list of things that we should do. Is add in an average favorable excursion and adverse excursion, which are those green and red lines. I was looking for the right terminology. Thank you for providing it, William. So we'll do that. Bruce, how about a print button? Yes, that's a good idea as well. There isn't a print button there at the moment. We're going to have to start writing these down. We can easily add a print button there to print your trade paths. Craig, is ST currently using this information to tighten stops? No. And in fact, Craig, that's exactly where this is going. And this is why we started doing this, because it has to do with tightening stops. People have, since the beginning of time, sentient trader time, people have said, can we set trailing stops? What about trailing stops? Should we set trailing stops? What about break-even stops? How many days after entering a trade should I set a break-even stop? And that is why this trade path information is really, really useful, because the answer to those questions is unfortunately not simple. We experimented with putting some trailing stops into Sentient Trader, but the truth is that trailing stops need to be monitored differently depending on which wave you're in and depending on the character of your market. So it becomes very complicated. But using this trade path information, you can do this research for yourself. And let me show you how. If we display only winners, and then let's show both, and let's use a simpler one there. There we go. Now, if you let's talk about a break-even stop. Let's say that you think that you have noticed that trading with Sentient Trader, you enter a trade,